let's talk about what happens when a stock just takes off. I mean, really goes parabolic. That's exactly what's been happening with Zijin Mining Group. It's been on an absolutely incredible run. But the big question is, right? Is this a rocket ship that's just getting started? Or is it a risky bet that's about to come crashing back down to earth?
And when I say incredible, I really mean it. Just get a load of this number. Over the last year, the stock is up a staggering 158%. Now, that's the kind of return that makes everybody sit up and pay attention. And it's exactly why we're going to break it all down.
So you have to ask, what is fueling this thing? What's the engine behind this massive move? Is it just hype and speculation? Or are there some really powerful fundamentals driving this train forward? Well, let's dig in and find out. All right, here's how we're going to tackle this. First, we'll look at the pure, raw momentum of the stock. Then, we're going to pop the hood and check out the company's financial engine. After that, we'll ask the really tough question, is the price just too high? Then we'll look at a major analyst call that kind of changes the whole picture. And finally, we'll wrap it all up with your final takeaway. Okay, first things first, the momentum. And look, there's just no debating this part. The trend for Zijin has basically been a one-way ticket, straight up. This is the very definition of a stock in a powerful, powerful bull market.
And what's so interesting here is that it's not just one thing. It's everything pointing in the same direction. It's a total consensus. The technical charts, they're screaming, strong buy. The Wall Street analysts who cover the stock, they agree, strong buy. And the price itself, yeah, it's bumping right up against its 52-week high. It's like the market is shouting that the wind is firmly at this stock's back.
But, a hot stock price is one thing. The actual health of the business, that's a whole other story. So let's shift gears from the stock chart to the financial statements and really look under the hood. And wow, this is where the story gets really, really compelling. A return on equity of 30%, that's just fantastic. To put it simply, for every single dollar of shareholder money in the company, the management is generating 30 cents in profit. That's an incredibly efficient operation. And when you pair that with a solid return on assets and a really healthy profit margin, you're looking at a well-run, profitable machine. So the company is strong right now, but what about the future? Well, this number right here is a huge piece of the puzzle. Analysts are forecasting a massive 63.4% growth in earnings per share. This is the future story that investors are so excited about. And frankly, it's the kind of fuel that could keep this rocket ship flying. Okay, so the story is great. The fundamentals are solid. The growth looks amazing. But this brings us to the other side of the coin, right? The big flashing warning sign for anyone looking at a chart that's gone straight up. Have we already paid too much for all that good news? Well, if you look at one quantitative model, which is basically just a fancy calculator using a ton of financial data, it spits out a fair value of around 33. That's what the computer thinks the stock is actually worth based on its numbers. But as you can see, the market price is already over 35. That suggests the stock is trading about 6 or 7% above what the model thinks is its true value. In other words, the market might have gotten a little ahead of itself here. And this slide really lays out the risks perfectly. The PE ratio is almost 20. That can be pretty rich for a mining company. The price-to-book ratio is over 5, which means investors are paying a huge premium for the company's underlying assets. On top of that, it's volatile. That beta of 1.25 means it's 25% more jumpy than the market as a whole. So if the market has a bad day, Zijin is probably going to have an even worse one. So just when you're starting to think the valuation looks a bit stretched, a brand new and really crucial piece of information drops. A major report from the analysts at Macquarie comes out, and it could completely reframe this entire debate. This is a potential game changer. And here it is, the core of their entire argument. Macquarie says Zijin is set up to be one of the single biggest beneficiaries as the prices of both copper and gold go up. And this isn't just some vague prediction. They have very specific reasons for believing this. Their logic is actually pretty straightforward. It boils down to 3 steps. First, their own experts are forecasting higher prices for both gold and copper. Simple enough. Second, a huge copper project for the company just got a major positive update, which basically took a ton of risk and uncertainty off the table. And third, because of those first 2 points, they have jacked up their earnings forecast for the company in a huge way, raising their 2026 estimate by a staggering 61%. So, what's the bottom line? What does this all mean for the stock price? Well, Macquarie didn't just bump up their price target a little bit. No way. They raised it by a whopping 75%, all the way up to 40 Hong Kong dollars. That implies a ton of potential upside, even from where the stock is today, and it completely changes the conversation around valuation.
So, after all that, where does it leave us? Let's pull it all together for the final takeaway. And really, it all boils down to that classic investor battle: unbelievable momentum clashing with a potentially sky-high valuation. This slide just lays it out perfectly. On the one hand, the bull case is all about that powerful momentum, the amazing financials like that 30% ROE, and this massive growth story that just got a huge boost from that Macquarie upgrade. But on the other hand, the bear case is all about the fact that it's already trading above fair value, with some eye-watering valuation numbers and a higher than average level of risk.
So what does this really mean? It means that right now, Zijin is what you'd call a classic momentum stock. The whole investment idea is built on the bet that this strong fundamental story, combined with positive analyst reports and rising metal prices, is going to keep pushing this powerful trend even higher. It's a bet that the party isn't over yet. And that leaves us with the ultimate question, doesn't it? The one any investor has to face with a stock like this. You have a company that is absolutely firing on all cylinders with a clear runway for future growth. The market knows it, and the price definitely reflects it. So you have to ask yourself, when a story is this good, how much is too much to pay for that future? That's the billion-dollar question.